Today is April 1st, 2024. I'm going to do a quick breakdown of the NQ and its price action. As you can see, on Thursday, it was a long weekend, so no trading on Friday. On Sunday open at 6 p.m., you can see price went straight up about, I would say, 100 points or so, 500 to, over 100 points. And it left this volume imbalance over here. Now, I never trade until after 9:30 when the market opens on a weekday. So at this point, I'm just watching the market and price how it lays out. You can see buy side liquidity. There is relative equal highs. It is unable to take that liquidity out, and it just after that big move at 6 p.m. to 7 p.m., it sort of ranges for the rest of the over midnight and London session. And then once 9 a.m. hits, you can see that it comes back down, almost fills the gap, the entire volume imbalance. Let me just point that out right here. You can see it right here. It almost fills it up and then it continues going higher. So let's break down to the 5-minute candle and break it down. So 9:30 open is right on this candle, and I never trade right at 9:30. I watch price for at least 15 minutes or more just to see what price is trying to do, and then I look for my setup. Now at 9:30 when this happens, it's definitely no trading. It went up. Okay, what is this? 125 points, right? When it goes this high, I'm not watching or I'm not placing a trade looking for higher price movements unless it shows me good enough retracement. Because if I was to just enter on a retracement over here, my stop loss would just be too wide, right? Like if you think about it, if I entered on this 200 EMA, I have to technically put my stop loss below this wick, which is a 67-point stop loss, and I never do that. My stop losses are usually, I would say, 25 to 30 points. Sometimes it can be max 40 points, but not that much. So when 9:30 opens and it goes above almost 100 points, it takes out a key level, which is the London high. This yellow shaded area is the London market or the London time from 1 to 5 a.m. And you can see that it takes out the London high over here. And once it does, it sort of leaves a few wicks. It tries to break through it, but it just cannot. So at this point, I'm just watching and waiting. Now, when price breaks down this hard, I'm not looking to enter long because I would still look for a premium discount level. So for this, it would be from this low to this high. And you can see it didn't come to the 50% level and it went higher again. When it goes this higher, again, there's no reason to trade it because your stop loss would have to be over here, and then aiming for just a 1-to-1 ratio for this buy side liquidity, it just doesn't make sense. You want to look for at least, for me personally, I look for 1.5 or higher for a risk to reward ratio. So one just doesn't really do anything for me. And then I'm still watching, and then you see price displace lower. When it displaces this lower with such full body candle with no wick, that's when you start thinking price may have made this the high of day and it may continue going lower, taking out the previous day low. As you always know, the previous day high and the previous day low is usually the liquidity grabs for price. So when I see price make this displacement lower, I look at the fair value gap that it just formed over here. This fair value gap, on top of that, you have the order block over here. So realistically, you can enter at the order block or at the fair value gap, aiming, and you can see stop losses between 30 to 40. Me, I usually put it, depends, sometimes I put it above the wick or I can just put it below the body. When it's a full body candle, I won't expect it to go higher than the wick, and it's way above the 5-minute fair value gap. So I'm safe putting the stop loss over here. And you're aiming for first this low, which is the 9:15 low. And you're also aiming for the previous day low, which is all the way here. So this is almost a 3-to-1 risk to reward ratio, right? So this is one of the trade opportunities you can take. Once you see displacement lower, you wait for the pullback, you see the order block, you see the 5-minute fair value gap, and you can enter a short there aiming for this low as well as the previous day low. And right there, you can have a 3-to-1 risk to reward ratio. So as long as it's about 1.5, 2 plus, those are the good trades. You don't want to always look for just 1-to-1 unless you have a really high win rate. And there you go. And now I can see after that, you can see price just consolidating, just going higher and then going lower. And then at this point, it is also Monday, April 1st, which is Easter Monday, and a lot of countries do have today as a day off. So it's best to just not trade anymore for the rest of the afternoon and just wait until tomorrow when more news gets comes into play. Okay, thanks for watching, guys. Take care.